Everybody, welcome to Making Money in the Markets with VectorVest. My name's Russell Markham and it's a pleasure to have you along today. Let's just put my camera on here just for a second so you can see me. And so today I'm going to have a look at some retirement stocks, and I thought about why not throw a couple of ETFs into the mix as well. So we're going to look at some good dividend paying stocks, and then we'll blend it with a couple of ETFs just for a bit of fun, just to see what we can come up with. Can we derive some good dividend yield, some franking credits, and then sort of overlay it with some price performance of ETFs? And well, let's see what we come up with today. So it's a bit of fun. All right, so I'll just transition back over to the slides just before we get going. Please note our license numbers here. And in addition, please note general advice only. I cannot take into account your personal financial circumstances. So anything that I show you today, please, it's not personal advice. You need to speak to your financial advisor. I don't know whether any of these stocks or ETFs are suitable for you today. All right, as long as we're all clear with that, let's get going. So I'm going to close out of here and I'll move my slide set out the way. And so I'm in VectorVest, and first thing I'm going to do is I'm going to go to the UniSearch tool, and I'm going to just make this nice and easy to begin with. I'm just going to show, say, 5 in total. So what I'm doing here in VectorVest, so just show you on the left hand side here, we have this incredibly powerful tool called UniSearch, and UniSearch can go help us rank, sort and find all sorts of different stocks, ETFs, LICs, REITs, you name it. It looks for certain parameters. And so for today, I know it's a bit small, but just bear with me, I'll point it out to you. If you've got it installed on your system at home, it's easy to see just with presentation purposes. Here it might be a bit difficult to see, but here, searches retirement. So I've gone and opened up under UniSearch, this search here called searches retirement. And the one I want to pick on today is this one here called dividend bargains. All right, so I'll just clean that out just so you're not distracted with all the stocks to begin with. So there's the search here called dividend bargains. What dividend bargains does is it goes and finds dividend payers of a yield of at least 2% or better, and then it picks on those stocks that are buy rated. Now, buy rated, we don't necessarily mean that you rush out and buy them. Buy rating, to get a buy rating, the stock must have very good fundamentals and technicals on average. All right, so I've scrolled across over here. Here is this buy rated column, or rec as we call it. Okay, and so having a look over here, if I click on the first one, we know it's got a dividend yield of 2% or better. Looks fairly volatile to me. It's bouncing around a lot, but if you actually look at the trend, it's been pretty consistent. Although it looks like it's fairly volatile, it actually doesn't really move all that much. It's just, it bounces a lot, but it's not extreme. Nonetheless, I don't know, not entirely sort of convinced by the pattern. I would probably want something a bit smoother, but nonetheless, its dividend yield is currently 2.29%. And so, you know, you're getting a fairly decent, consistent uptrend with a good 2%. Now, coming back to the search here, the magic with this search is that it's looking at value divided by price. So each and every day we go and work out the valuation of each stock. So if I put the value next to the price, here we go, value and price. All right, and so how do we calculate the valuation? So if you take out a trial of VectorVest and you want to drill into the nitty gritty, you could click on the training tab when you first log into VectorVest, and we've got this powerful book here, Stock Strategies and Common Sense by our founder, Dr. Bart DeLito. Sadly, Dr. Bart DeLito passed away a few years ago, but what a legacy he has left over the years. An amazing human being. And so if you get the chance, it's not a big read. Dr. DeLito was all about, you know, cutting to the chase and getting to the facts immediately. And you can see it's only like 70 odd pages for the book. And so the chapter I want to refer you to here is number 4, how to value stocks. So beginning on page 16, if I scroll down to page 16, we're 18, here we go. So how to value your stocks. All right. And anyway, I'll cut to the chase. I'll move on just a little bit more. You don't need to be mathematical. If you are mathematical, you'll get a lot out of it as well. But just scrolling through here, just cutting to the chase. Valuation, the key drivers of valuation: earnings growth rate. Earnings growth rate. Companies got to be growing their earnings year in and year out. So anyway, I'll leave that there. It's chapter number 4, but some of the key parameters that go into the valuation is earnings. Earnings drive company valuations. And so coming back to here, let's pick on, say, the next one. All right, I'm going to pick on this one here, and I'm going to come into here and I'm going to put on an earnings profile. All right, so here we are. Here's our EPS profile. All right, as company earnings start picking up, let's turn off the yield for now. As earnings start picking up, what happens to the share price? Yep, you got it. Share price goes up. Right, here earnings are going up. It's not always in perfect correlation because there are market cycles, but you can bet your bottom dollar companies that are growing their earnings are going to be companies that are going to be growing their share prices. And so here's a classic correlation: rising earnings, rising share price. And so if I then come in and put in the valuation, so let's put in the value of this company. So as you can see, as earnings, let's turn off the share price for now. All right, as earnings go up, valuation goes up. All right, so this earnings profile, EPS, will not agree with your broker. It's proprietary to VectorVest. It looks at current, historical, and then it also builds in forecasted earnings. And so what's key for us here at VectorVest, I'll just make it jump out a bit more for you. What's key for us here at VectorVest is to make sure that we're buying into companies that are growing their earnings. All right, so now putting it all together, taking off the valuation, earnings going up, share prices going up, and then we also want to make sure that we're getting a dividend of at least 2% or better. And here we go, we're getting that 2% dividend. In this case, it's a 4% dividend yield. All right, so that's the basic building blocks. Now, some of these, I'm looking through them and I'm going, well, they're a little bit volatile for my liking. Sure, I am getting 2%, in this case a 5.69. And yes, earnings have come up, but in the current cycle, it is sort of floundering a bit. What if I could find those companies, not only are they growing their earnings, but they're on the move. They're on the move currently. So what I'm going to do here, I'm just going to make a slight modification. Under dividend bargains, I'm going to put this additional parameter. It's called the comfort index. Just click and point CI, there it is, under capital appreciation. It's on a scale of 0 to 2. And the higher above 1, the smoother those stocks. So 1.2 is a very nice smooth trend on average. All right, so you'll see if I now go and graph these stocks. So I've just made a slight tweak to it. And so this is one I think we looked at before. So it's currently doing what we want it to do. It's going in an uptrend. All right, so I'm just going to scroll through. Probably need a bit more liquidity on the stock. It doesn't look very liquid. It's going in the right direction nonetheless. Right, there we are. That's a nice one. All right, that's a nice one as well. So it's going in the trend we want, and we're getting at least a 2% or better dividend yield. All right, so let's make a slight additional few tweaks here. I'm going to come into here. I'm going to go stocks, price volume, and I'm going to put in a 50-day average volume. All right, so average volume over the last 50 days greater than or equal to, and let's put in 50,000 trades or more. And I'll put in one additional parameter. I'll make sure that the price is at least $1 or higher. I don't want anything below $1. All right, let's run the search. Here we go. Now we're going to shortlist. We're going to shortlist a couple of stocks, and then we'll go and do a similar exercise for ETFs. So it doesn't matter which way I cut, slice, and dice. This one seems to be coming up quite a lot. All right, so it looks like this one stacks up. So I'm going to jot this one down. I've got my pen going here. WQG. Doesn't look too bad. It's going in the right direction. Earnings going up. Got good dividend yield. If you're interested in that comfort index indicator I just spoke about, I think I've already put it into here. Here we go. Here's the comfort index. And on a scale of 0 to 2, when it breaks above 1, it tells us that on average, the stock's in a good trend. And you can see, look at that. It went from $1.20 odd to now $1.80. And the comfort index has not broken below 1. Dividend yield, currently, what is it now? It's sitting at 4.1%. All right, so you've been hovering around about 4 to 5%, and the earnings continue to power up. All right, so that stacks up. Let's look at the next one. I like the look of this one better in terms of its profile going up. Very nice profile. Comfort index, let's make this jump out just a tad more. Comfort index breaks above 1 around about here. Where was the price? 75 cents. We don't want penny stocks, but right now it's gone up to $1.53. Okay, so it's doubled in price. So now it's not a penny stock. Earnings are rocketing up. Yield has gone up. Look at that. My goodness. Look at the yield. 9.48%. And so this one certainly jumps out currently with a whopping just on 10% dividend yield. TWR. So I'm going to jot that one down. Let's go to the next one here. Don't know about you. A little bit volatile. Now, depends. If you're looking at it currently, so, what's the problem? The last 5 months has been stellar. For retirement purposes, I'm probably a little bit more conservative. I want a longer term, smoother profile. To me, it's just a little bit sort of volatile. And, I need more data than just a couple of months. So I'll skip that one. This one's not too bad. All right, yeah, a little bit of volatility here and there, but the general trend is good. Earnings have been sort of floundering, but in recent times they've shot up. The comfort index has been holding above 1 for quite some time. And look at the dividend yield on offer, it's sitting around about, consistently around about 3 to 4%. So it looks pretty decent to me. I'll jot that one down. Dow, let's see. There we go. So now for this exercise, I've just shown you the top 5. Now, if you take out a trial of VectorVest or your subscriber, put the top 10, put the top 20, however many that you're after, you can put in a lot more and work your way through it. So for demonstration purposes, I generally tend to stick to 5, just otherwise it becomes a little bit of information overload. But let's just pick on one more. KSL, look at that, beautiful upward trending earnings at the moment. Comfort index is, wow, it broke above 1 a long time ago when the price was 88 cents. The price now $1.30. And the dividend yield, it's sort of slowly falling away, but who's complaining? It's still 7%. All right, so I'm going to leave it at that. You've got all the power here. And for demonstration purposes, I just limit it to the top 5 typically. All right, so I think we've got enough from a dividend perspective. So what I'm going to do here is I'm going to put those stocks into a watch list. Now, VectorVest has this amazing tool, watch list viewer. I can't live without it. It's a real time saver. And I just now can put in all the stocks that I've just identified. Now, I put in .ax to tell VectorVest it's for Australia. All right, so here we go. I'm plugging them in. And what was the other one I identified? KSL. There we are. So these are the ones we've just identified, right? So 4 in total. And I'm going to show you the average of all these stocks. So down the bottom, right-click View Watch List Average. All right, you'll learn all this functionality if you're new to VectorVest and take it a trial. It's not hard. It's just the first 1 or 2 times you see it, it's new, and then it becomes, old school type thing. It's just repeat and rinse. And so, don't be overwhelmed. It's very easy once you've spent an hour or 2 just familiarizing yourself with a couple of basic techniques. And so all I've done here is I've just identified some great dividend stocks, put them into watch list. Here is the average of all those stocks. Here's the average earnings. Look at that, doing what we want. Here's the average yield. So what's the average yield? 4.5%. Wow, that's pretty decent. And across all those stocks, the comfort index went, there it was at 1. It went above 1 on the 19th of February. 19th of February, it went above 1, and look at that now. So the average price was $2.02, and what's the price now? $2.88. So, what's that? That's 0.8 divided by 2 approximately. It's about close to 40%. 40% returns in, what's that? What's that time frame if I zoom it in? 1 year and 5 months. 1 year and 5 months. Pretty decent for retirement stocks. Okay, so if you pull it back a little bit further, you can see the track record of those stocks in recent years. So you can see here it pulled back, it consolidated. Notice here the earnings were falling. Earnings start turning around and up they come again. So that's why it's so important to make sure that you're looking at all your stocks. Only buy in once the earnings start turning around. only look to buy in once the comfort index breaks above 1 and holds above 1. So a great illustration of timing and getting your indicators to work here for you. Okay, so from a retirement perspective, pretty decent. We've got a dividend yield of 4.51. Let's add in, what have we got from a franking credit perspective? So here we go. From a franking credit perspective, we're about 40% on the interim, and on the final franking credits, we're about 37. So you're getting around about 30 to 40% franking credits. So you've got some good franking credits thrown in there as well. And again, you can repeat the exercise, but ensure that you're finding fully franked, both interim and final. If you're not sure what that all means, have a look at some of the previous replays on the YouTube channel. We go into a lot of detail on franking credits. All right. So pretty decent from a retirement perspective. It's only 4 for now, but I want to now supplement this with some high performance ETFs. All right, so I've got 4 good retirement stocks. All right, so far so good. But let's supplement this with a couple of good quality ETFs. And so how do I do it? With VectorVest, under the Viewers tab here, I just simply click down here, ETF Viewer. This will find me some of the best ETFs. All right, so straight away, what I've done here in VectorVest is I've sorted my ETFs by relative timing and CI. So just to cut to the chase, it's going to find me some of the smoothest left to right performing ETFs that are currently on the move. And so I'm just going to graph the first couple here. And again, I could just limit it to the top 5, just to show you the functionality that we've got here. Now, you're not going to get earnings for ETFs because, you can't consistently get all the information to tell you all the different companies across those ETFs, what they're doing. I don't think anybody can provide that to you. If you do know someone that can do it, let us know. That would be incredibly useful. So we're relying on technical analysis here. I'm looking for, let's just stick with the comfort index for today. Look at this. It breaks above 1 around about here. 163, it's now up at 205. So what if I can go and identify some wonderful ETFs? Now this one here, I really like the fact that this ETF has been well above 1 for quite some time. A few of you may say, well, it's not really my cup of tea because it's only got 1 year and 10 months worth of data. It doesn't have a longer term track record, which is fair enough if that's not appealing to you. This one here right now, it looks pretty appealing to me. It's doing what I want it to do. It's going up, and I've got over a year's worth of consistency here, at least on the CI indicator. All right, so that one jumps out. Let's keep looking through. Probably not enough. I mean, look, it does break above 1 here. It has been a little bit volatile, so I'll keep moving on a bit more. I like the look of this one here. You can see I've been drawing lines in this in earlier days. I picked up the early trend as CI was turning and what a buy that was. So here we go. CI 102. And what was the price? 640, now 950. I like that. I like the fact that it's holding up. So I'll jot that one down, MNRS. All right, so I'll put that one down. Let's see which other ones jump out. See how easy it is to do VectorVest? Probably not enough data there. Not enough on that one. I like the look of this one. Look at this. Look at this. Brilliant. All right, CI. There it is. Breaks above 1. 221. 316. What a good looking one that one is there. So ETPMP. What a complex ticker code, that one. Global X Physical Precious Metals it tracks, it looks like. All right, so let's see. Can we get one more? There's another gold one. We probably don't need another gold one. We've already got a precious metals. Let's see if we've got anything else. Oh, there's a silver one. Look at this. This one's done pretty well. CI breaks above 1 here. Now, again, you might argue, so, well, I've already got a gold and a precious metals. Do I really need a silver? It's up to you. If no is the answer, then keep looking on a bit further. This one does the banks. All right, so here, look at that. CI breaks above 1 here. A little bit of volatility there, which might put a few off, but it's certainly been holding steady. Look at that. There's another gold one. Looks like gold's really performing. Another gold one. Another gold one. And here's one for, what's this, tracking, I think the top 50 Asia stocks. It looks like here I'd need to drill in S&P Asia 50 ETF index. All right, so again, you just work your way through until you find the ones that jump out to you. I think I'm going to go back, and I like the silver one. I think that one to me really jumps out quite well. The bank one was pretty useful too. This one here, I think that I've got gold, I've got silver, I've got one or two others that then jump out. So another long ticker code, this one. What's this one? ETPMAG. All right, so let's close out of here. How hard was that to find? ETF viewer. I just sorted these with the smoothest left to right patterns out there, and I just picked on a few that really jumped out. I'm going to go back to my watch list viewer, and here we go. So these are the ones that we began the day at, and let's just plug the last few in. So ETPMAG was the one we just looked at. Game, we also identified MNRS, and we identified ETPMP. That's, whoops, did I not put that last ticker code correctly? What was it? ETP, I'll just make sure I type this into ETP MPM, I think, was that the one? Okay, so I'll plug that one in. Apologies if it's not, but you get the idea. It's a methodology I'm showing you here. So 2, 4, 6, 8 in total. So here they are. Let's look at it now. We haven't got the earnings profiles in the ETFs, so we just need to be mindful of that. But this now has a combination of both good dividend paying stocks and consistent uptrending ETFs. I think it's quite a nice blend. And so you can see here, just out of interest, CI breaks above 1 here on the 27th of March at $33. And this was 27 March 2024. Look at that. Just over a year later, and it's almost doubled. It's gone from 33 to 51. That to me really jumps out. And so the trend is on its way, and also across several of the stocks, I'm going to be getting a pretty decent dividend. All right, so if I'm looking at the dividends here, 9%, 4, 3, 7, and then here are ETFs where we're not getting much at all. So I'm getting a blend of growth and dividends, and to me that really jumps out. All right, so I'll show you the watch list average again. There it is. What do you think? Quite a powerful bit of analysis here today, where we're getting a blend of growth and dividends. All right, so see what you think. I'll leave the last list here. Again, no personal advice. I cannot tell you whether this is suitable for you or not, but I certainly hope you enjoyed the short presentation here. We'll see you same time, same place next week. And until next time, bye for now.